My name is Jeffrey Kennedy, and welcome to Elliott Wave Junctures. Last week, we examined this price chart of the South African Rand. And in that episode, we looked at some of the key characteristics of counter-trend price action: wave equality, parallel lines, and divergence. At that time, I was making the case that the South African Rand would actually continue higher back beyond the October high. Well, since that time, prices have actually moved sideways. The reason I'm talking about this price chart and this price action today is it allows me to address a very important aspect of the wave principle and its successful application, and that is adaptability. You must be able to apply the wave principle in an adaptive or fluid manner. For example, the South African Rand. We actually identified this move to the downside as a three-wave move, as specifically a zigzag, and we were looking for prices to go higher. Our initial conclusion was that the October sell-off was a corrective wave pattern, a counter-trend price move that would ultimately be more than fully retraced. Well, since then, prices simply didn't do it as immediately as what we expected, which was to simply continue to climb higher. They moved up a little bit, but then they pulled back and have since gone sideways. But if you look at the price action, the substructure, you'll see another wave pattern begin to take shape. And what I'm referring to is this pattern right here. This is the South African Rand, again, with the 240-minute price chart, but now considering the additional substructure we see in this market, we now can see that a contracting triangle is taking place. We still need a little bit more upside to complete wave D, and then another minor pullback to finish off wave E, but bottom line, it does appear that this market is tracing out a contracting triangle. Now right now, I would probably go ahead and identify a critical support, or the point where I'm wrong in my analysis or forecast, is the extreme of wave C. I certainly want to see prices fall below that level, because by doing so, you're also taking out the trend line, which connects the extremes of waves A and C. But bottom line, the application of the wave principle, if you're going to do it properly and successfully, it really should be a fluid approach, an adaptable approach. Rarely do you see markets move just like this, straight line diagrams. What you tend to see in price action is more of a channel type formation, where prices move within bands. That's the fluidity and the adaptability that I'm actually referring to with respect to the wave principle. Let's look at a few more price charts. This was a price chart we also looked at. This was the Czech Republic currency, and we also identified this move to the downside as a WXY, which bottom line argued for further rally to the upside. We did push higher, but we appear to have stalled. Well, what I'm anticipating at this point is this. This is an initial move up for wave 1. I'd like to see this move, or what we refer to as a throwback, actually come back down, test the trend line here, and then still see further rally. So even though prices are not unfolding precisely as we originally anticipated, they're still moving in the direction we anticipated. And that's what's most important. The application of the wave principle must be fluid. It must be adaptive. Let's look at one more final market. Now in this price chart here, we were looking at Kinross Gold Corp, and this is what we were essentially anticipating. A move to the downside for wave A, a bounce up in wave B, and then another round of selling back to near the previous fourth wave extreme. In fact, these lines are exactly what I traced out when we were trading back in early October for Kinross Gold, because we had just completed a 5-wave move. Now in this instance, prices pretty much followed our forecast almost to the letter. We didn't get as far down to the previous fourth wave extreme, but still we were looking for a down up down sequence to finish a larger zigzag in this market prior to further rally, and it appears that we do indeed have that in place. So I would go ahead and identify the market as such. I'm looking for either this to be a bottom, and if we can successfully penetrate this trend line right here, then we can go ahead and eliminate the idea of one more new moderate low and continue to look for prices to travel higher. Again, I find that after counting waves for almost 20 years, that rarely does a rigid approach prove fruitful. I think an adaptable approach, a fluid approach, is much more successful when identifying wave patterns and counting structures. Thank you very much, and have a good day.